Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to talk about something interesting, which is which stocks should you be watching and when? I know it's a lot of W's there. We're essentially going to answer a question that came out of our private coaching call on Monday night. I think it's a very important question, mostly because I think a lot of traders have the misconception, and I think it's a big misconception costing a lot of money, where you're trading far too many stocks and you don't really understand yet. Maybe you don't have the experience yet to understand when you should start looking at different stocks. I think that it's funny. I was having a conversation on Tuesday afternoon with somebody else who happens to be a veteran trader. This guy was trading he has and is trading for 25 years now. And we were joking around about when we first started trading, that we were only allowed to watch one stock for a month. Think about that. We were taught that you needed to learn that stock, know that stock inside and out, and that was the quickest and fastest way to make money. Because really, the bottom line, the only thing that matters is at the end of the month you get paid. It doesn't matter how big your sheet is of stocks, of how many stocks you traded. It matters that you got paid. Isn't that all I mean, that's really the only thing we're here for. We're here to get paid. So it's kind of interesting how, especially in today's universe where there's so many different ways to read news stories, run scans, and all of that kind of thing to find ideas. But really, we're doing all of that to get paid. The only thing that matters is getting paid. So if I told you right now, I'm going to give you one stock to watch from Monday through Friday, that's the only thing you're allowed to trade. And there's a pretty good chance that at the end of the week, you're going to get paid, regardless of your experience, which, by the way, is what happens in the boot camp when traders finally drill down and listen and break bad habits. You'd be surprised at how much more relaxed you are actually trading. Where you get antsy is when you're like, I need to be doing something else because everybody else is calling out ideas in the community and I want to get involved in all those other ideas. Here's where I want to give you a little bit of a different way to think about it. Let's say you own a deli. You make sandwiches for a living, and that's how you own 5 delis, and you're making a fortune running those 5 delis. You know everything about running those 5 delis. And then one day you decide, you know what, I'm going to open up a seafood place that has nothing to do with running a deli. Completely different type of food, different restaurant, everything is different. And then you invest everything you have in your spare change into running that store, and you've never done it before. It's just foolish. It's absolutely foolish. So what you should do is either get a job with somebody else who runs that kind of store, do some research before you put some money into it, visit a whole bunch of restaurants that you want to open up something like that so you can get a feel for how they're running the place. You invest a little bit and get feedback, right? So that's the difference between what we're about to talk about, which is trading your universe of stocks that you trade every single day versus trading stocks in a game plan that are not necessarily the stocks you trade every day, but meet the criteria. So in the first case, the universe that you trade every day, which could be one stock, it could be 5 stocks, it could be much bigger than that, depending on how much experience you have. So the stocks that you trade every day versus the stocks that you found in the game plan, that's the seafood place. The business that you don't know yet, the stocks that you don't know yet, they just met criteria and you put them in your list. Or maybe it's something someone else in the community called out and you don't know that yet. So your job in this other business that you don't know that you want to expand into, and by the way, there's 2 ways to expand your trading business, which is larger share size and a bigger list and trade more, right? In that second business, it's your job now to maybe put on 100 shares in that stock that you don't know, as opposed to being like, wow, I have $500,000 in buying power. Joe Schmo or Jane Doe just called out that stock that I've never heard of in my entire life. I'm going to go buy 1,000 shares of that stock. It's dumb. There's no other way to put it. It's dumb. So we're going to jump on to a question asked by Todd, and that was just the intro. Todd asked a question about how do you jump back and forth between them, and then we're going to look at 2 different ways to do that. Okay, so by the way, if you find these videos helpful, definitely click down and subscribe. That would be awesome. And if you'd like to join the community, click down and learn about the boot camp. I think you'd be really happy to be a member of our amazing community. So we're going to shift over now to Todd's question to give it some clarity. So hey, Pete, can you talk a little bit about how you change modes between your game plan stocks and then when you cycle through your watch list. So let's just say, to put it in proper context, there's stocks that are in the game plan every day, that we have our meeting every day, 8:45 before the market opens, and we discuss stocks. And then there's stocks in the watch list, what I would call my universe, the stocks that are in there every single day. So let's say the game plan stocks are stocks that meet scanning criteria, or stocks that I'm not trading yet, but I want to consider getting into. So, I'll show you what that means in a second. And then there's stocks in my watch list that I know every day. So if you think back to what I was saying before about when I first started trading, I only traded that one stock and I really got to know it. And then as you get more experience and you get profitable, then you can add a second stock, a third stock, eventually get to the point where I'll show you, you can have as many as 15 or 20 stocks and you'll know when to trade them. So we're going to keep going here. When do you typically work the keyboard versus staying home and watching your game plan stocks like a hawk? So this is interesting. Work the keyboard is the phrase that I use in the inside of the boot camp and inside the community, because money's not going to pop out at you, regardless of whether you have a scanner, alert, or screener. It doesn't matter. Money's just not going to pop out of your monitor. You need to get in there and work the keyboard, cycle through your stocks, cycle through your stocks, cycle through your stocks. And again, that could be 3 stocks. It could be 3 stocks. It could be 20 stocks. But you have to get in there. If the stocks that are in your universe, again, your deli, the stuff that you know every day, if it's slow that day, which absolutely can happen. But if you pick the right separation of your stocks where they're not related and you have a various different industries and sectors, something should be in play, but let's assume it's not, right? You work the keyboard to find ideas. So the stocks that you trade every day, you could trade those a little bit more aggressively. But if the market's slow, we actually had this question asked yesterday. I believe it was by Emma. So a very good question by Emma as well is, what do you watch? Like in the universe of everything you're watching, what happens when the market's slow? Do you rely on the indices all the time, which I do? I look at when the market's obvious, and this is just good trading. When the market's obvious, then you trade stocks that are obvious with the market. That's relative strength to the market. So if the market's obvious, all that money in the market's on the same page, you should only be trading stocks that match that. Then there's times when the market's not doing anything. So what do you do then? Like the indices, like they'll gap and sometimes go sideways. They might be up or down, but they're not really doing anything in that moment that you're looking at it, right? So what do you do then? Then you drop down and you go industry specific. So now you're like, okay, the market's not doing anything. Now let me look at a different watch list and say, which sectors are obvious, which industries are obvious. So let's say, just for argument's sake, one that's easy to wrap our head around is technology. So let's say we look at semiconductor stocks. We're like, okay, there's 5 or 6 semiconductor stocks in our list. Are they obvious? And look over, like, wow, they're all green. So now you shift from looking at the market, looking at your universe, to focusing on those semiconductor stocks. Now, if they happen to be in your universe, you can trade them a little more aggressively. If they're not in your universe, then you would go in and get a little bit of feedback from the market. You trade 100 shares, maybe in 2 of them, if they meet your criteria for being a buyer in those stocks. So you can still get in there and make money in some other ideas, but here's the key. You don't need a monster list to get paid. Now, for me personally, I'm doing it for a while. You might be just starting. You might be swing trading for the first time and you want to buy a stock on Monday and get out on Friday. That might be the way you do things. But if you've never traded the stock before, maybe you just saw it come up on an alert. Maybe it was on Motley Fool. Maybe you saw Kramer. It doesn't matter. Whatever it is, you should get feedback. Keep thinking about this process. If you don't know the stock, you want to dip your toes in, get feedback. Dip your toes in and get feedback. That's the right way to grow a business. You don't go out and rent a 6,000 square foot warehouse when you've never run the business before. Yet some traders do that. They have a lot of money in their trading account that they made some other way, maybe from their full-time job. And like, I'm going to get in there and buy as many shares as I can in something they have zero idea how the stock actually trades. Stocks do have personality. Some have great liquidity. Some stocks move a penny at a time, from Monday to Friday, but they move a penny at a time. Other stocks move 50 cents at a time. You're like, whoa, what just happened? I was just up $2,000 and now I'm down 300. What just happened? That's the difference between your universe that you know every single day and you can feel confident in them because you made money in them, and then the universe of stocks that we would call our scanning stocks or alert stocks or whatever that happens to be. So I'm going to go right back to the screen and just give you an idea of what that looks like so you can start to think about the principles that we're just talking about right now. So we're going to finish up with Todd's question. So again, working the keyboard is going back and forth between stocks that are in the universe every day and stocks that came up with scans. So Todd says, I try to focus on my game plan stocks, but then when they aren't moving, so he's qualifying the universe that he's normally looking at isn't moving, I start jumping around and get a sick case of FOMO. So this is a big deal for traders, especially for active day traders, where you feel like you have to be doing something. I will flat out tell you this. I tell everybody in the community, day after day after day, moment after moment after moment, you don't have to trade. You have to trade when there's money sitting in the corner, like Jim Rogers said, so you can go and pick it up. The traders that have focus, the traders that have discipline, the traders that go through the program, the traders that ask questions are the ones seeing the greatest rewards because they're patient to wait for opportunities. So if we can go right back into looking at the charts now, there's two different lists that I'm looking at during the day. So during the day here is my universe that I'm in every single day. These are stocks that have good liquidity, good volatility. You might call them market stocks. They're spread out over different types of industries. Then we run scans during the day that meet my criteria that might eventually go into my universe if the stock I find is easier to trade and profitable. But there's certain parameters where, for example, this is a list sorted by performance over the last week. We could do the same thing, performance based on percentage change. And you can see it actually changed. So the stock was strong yesterday, but weak over the last week. You can see Roku matches all of the criteria. So what you end up doing as you start to become a better trader, you start out with a smaller list and you get to know that list. You get to know how it trades. You get to know if it moves with the market, not with the market. I fully recommend you start out with stocks that move with the market. William O'Neill taught every great trader in history says trade market leaders. It's a smart thing to do. There's daily institutional money in those stocks. They're market leaders. They're leading the industry, which means there's money flowing in and out. They move consistently with the market. You read the market, you read the stock, it's easier to trade. When you're all over the place and just trading a stock that was $2 yesterday and then exploded to 20 and then went back down to 5, that's hard to make money on a reliable, predictable basis. So you go back and forth between your universe that you trade every day. Then you have other stocks that meet scanning criteria. You're like, okay, let me get some feedback in that stock. Let me trade 100 shares of that stock. That stock's easier to trade. Then you start to put that in your list. And now you're trading that one a little bit more aggressive. Maybe putting that in your universe and take something else out that's not in play. We've recently done that with OSTK, where it's a really good stock to trade. Then it got out of favor. And certain days it becomes tradable again. So sometimes we're holding it overnight and swing trading, and sometimes it's just in play for the day. So that's another thing that you need to learn. So it's kind of fun to go back and forth, but the key here is focused first will make it much easier for you to have conviction and actually learn how to be a trader. So Todd's question was a great one. And it really comes down to, if you're not making money in your universe, then you could go out into the other stocks and start to get some feedback. When I say feedback, just to be clear, 100 shares of, let's say, Roku, 100 shares of NVAX, 100 shares of Zoom, 100 shares of JKS, stocks you might never have traded before. And as you get feedback, when I say feedback in two ways, you're making or losing money. And the second feedback is, wow, this stock is easy to trade. I can't believe I haven't watched it before. And then you put that into your universe. So this is how a trader builds and develops stocks that go in and out of the stocks you trade every single day. And then how you look for other opportunities. It's kind of like a different business deal that you now put into your list of stocks that you want to make money in as reliably as possible. So if you have any questions about this, definitely click down and leave me a comment, and definitely look into joining us in the boot camp. I think you'll have a great time in our community. We have just amazing people in there. Have a great day, everybody.